Welcome back to the channel, everyone. Let's start with the first company on the list today. This one is sitting right at a major horizontal support level. The name of the company is Safehold Inc., and the ticker symbol is SAFE. Now, I've pulled up the weekly time frame so we can get a complete picture of the stock's price history. And here's something really interesting. This stock has been bouncing off the same support level for nearly 7 years. We're talking about $15.50. Not the exact number, but somewhere around that zone. The first time it touched this level was April of 2018. Since then, it has revisited this price multiple times, and every single time, buyers have stepped in and pushed the stock back up. Just look at the history here. It first hit this level in March of 2018, then again in August, October, and January of 2019. And after those multiple retests, the stock took off, rallying 470% to a high of $95. That's a massive move from these levels. But here's where it gets even more interesting. Fast forward to October of 2023, and guess what? The stock once again dropped to this same price level. And just like before, buyers stepped in and the stock rallied 50% from its support. This entire move from its lowest point to its peak took about 1.5 months. Now, let's look at where it stands right now. At the moment, it's trading at $17.50, which means it has already bounced 12% off that support. And you might be wondering, why didn't I bring this up earlier? Well, there's a reason for that. And this is where it gets really interesting. Let's switch to the daily time frame. Take a look at this. There was a clear downtrend in this stock, but recently that downtrend broke. Not only that, but the immediate resistance at $17.32 has been cleared, and the stock is now trading above that level. So now we have two major confirmations. One, the stock held its historical support level. And two, it broke out of its downtrend, which gives some additional confidence in the setup. But let's also talk about the concerns, because no setup is perfect. There are two key risks to keep in mind here. First, the 200-day exponential moving average is very close to the current price, and that could act as a resistance. So that's something to watch out for. Second, the stock is already 12% above its support, meaning if this support level does break in the future, we're looking at a 12 to 13% stop loss, which might be too large for some traders. But at the same time, let's not ignore the bigger picture. This stock has held this support level for the past 7 years and has never broken below it. And now, with a downtrend breakout, this setup is definitely worth keeping an eye on. To give you the full perspective, let me switch to the monthly time frame. Now you can see the entire 8-year price action, and just by looking at it, you can tell how significant this level is. So keep this stock on your watch list and track its momentum. The company we just discussed is Safehold, ticker SAFE. They operate as a real estate company, specializing in acquiring, managing, and capitalizing ground leases. Now let's break down the numbers. SAFE has a market cap of $1.25 billion, making it a small cap stock. They generated $369.55 million in revenue, pulling in $105.76 million in profit, which gives them a profit margin of 28.62%. The PE ratio stands at 11.66, and their EPS is $1.50. Investors looking for dividends might find this one interesting, as they offer a 4.05% yield. Pretty solid for a real estate stock. Let's move to the second company on the list today with the ticker symbol JBSS. Just like the previous stock, I have this one opened on the weekly time frame, and once again, we're looking at a strong horizontal support level. The structure is very similar to the first stock we discussed, so we'll keep this one short and focus on the key points. The horizontal support for this stock sits at approximately $67. And what makes it significant is that this level has been holding strong for nearly 6 years now. Let's go back and look at its history. The first time the stock took support at this level was way back in March of 2019. And from there, it rallied 60%. Then, exactly a year later, in March of 2020, It came back to this support and bounced again, delivering a 38% move. After that, it revisited the support in June of 2022, which was about 2 years and a few months later. And from there, it rallied a massive 90%. And now, here we are again. The stock is very close to this support level. And what's even more interesting is that it is showing bullish momentum. Take a look at the green candle that formed on February 10th. This means that in just the last 2 trading sessions, the stock has already started to push up from these levels. At the moment, the market price is sitting at $72.25, which means it is already about 7.5% above the support line. That's something to keep in mind because if the support does break, the stop loss might be a bit on the larger side. But on the flip side, the fact that this support has held up so well over the past 5 years is definitely a positive sign. Now, let's talk about something important: the 50 and 200-day exponential moving averages. Right now, the stock's current market price is below both of these EMAs, which means they could act as resistance. But here's the good part. Even if the stock were to face rejection from these EMAs, it still has about a 25% upside potential before hitting them. And if it manages to break through these moving averages, then we're looking at an entirely different setup with potentially much higher gains. So, just like the first stock, this one has a very strong historical support structure. If this chart aligns with your trading style, then it's worth keeping on your watch list. The company we had a discussion on is Sanfilippo, John B. and Son, ticker JBSS. They are in the consumer defensive sector, primarily selling nuts and nut-related products under brands like Fisher Nuts, Orchard Valley Harvest, Southern Style Nuts, and Squirrel Brand. This is a small cap company with a market cap of $840 million. They reported $1.12 billion in revenue and made $48.74 million in profit, translating to a profit margin of 4.36%. The PE ratio stands at 17.35, and their EPS is $4.16. For dividend seekers, JBSS offers a 1.18 yield. Nothing huge, but a nice bonus. The next company on the list today is XBiotech. Now, I have the chart opened on a monthly time frame first because I want to give you a bigger picture of this stock's historical price movement. But don't worry, we'll be switching back to the weekly time frame in a moment to break down the key details. All right, now that you've seen the overall trend, let's switch back to the weekly chart and analyze this setup. So the important support level for this stock sits at $2.77, and this level has held strong since May of 2017. That means we are looking at a support that has remained intact for almost 7 years now. Let's go back in time and see what happened when the stock hit this support level in the past. The first time it touched this support, it rallied 113%. Then, in September of 2018, it came back once again, and this time it made an absolutely massive move, an 800% rally from these levels. Now, before we go further, I need to highlight something critical here. This stock has a very, very high beta, meaning its movements are extremely volatile. When it moves fast, and that's something we need to be mindful of when analyzing its current setup. All right, let's continue. The stock again came close to this support in November of 2022, and from there, it rallied 60% in just a matter of weeks. And now, once again, the stock is trading near this crucial support level. Let's look at its current market price. Right now, it is sitting about 9% above the most recent support. But if we look at its historical support level of $2.77, the stock is 18% away from that point. And this is where things get interesting. Because of its high beta, the potential upside in this stock can be huge. If we go by the most recent high, the stock has a potential upside of approximately 225% from these levels. So this is definitely a very tempting price point, but at the same time, we need to track its momentum carefully. The company we just discussed is XBiotech, ticker XBIT. They're a biopharmaceutical company focused on the development and commercialization of therapeutic antibodies, with a pipeline targeting oncology, infectious diseases, dermatology, and inflammatory disorders. Now, here's where it gets interesting. XBIT is an ultra small cap stock with a market cap of just $100 million. However, they currently have no revenue and reported a net loss of $32.66 million. This means their profit margin is non-existent. Their PE ratio is not applicable, and their EPS is negative $1.07. No dividend here, so this is strictly a speculative play for those betting on their future pipeline. Friends, before we move on, I want to highlight something very important. The last stock we discussed, along with the next two stocks, do not have strong fundamentals. Let's just say their financials aren't great. Now, you might be wondering, then why are we even discussing them? Well, the only reason I'm covering these stocks is because of their strong technical indicators. So, to be very clear, these are not for long-term investments. These are strictly for short-term trades based on price action. With that said, let's move on to the fourth company on the list today, ticker symbol PLYM, Plymouth Industrial REIT. Now, this stock has a very similar chart pattern to the ones we discussed earlier, with one key difference that I'll highlight. The 16 level that you see on the chart, it has played a significant role in this stock's history. Back in 2020, this level acted as a strong resistance, but in March of 2021, the stock broke above it. After breaking out, it came back for a retest, and from there, it continued its upward trend. And now, after all this time, it's back at the same breakout price once again. Now, a couple of key points to keep in mind. The last time it came back to this level, which was in October 2022, the stock saw an immediate rally of 44%. And from its current market price, the most recent swing high is about 47% away. So those are two data points worth noting. Beyond that, there's not much else to add because we've already seen similar setups. So I'll leave it here. Keep this stock on your watch list and track its price movement. The company we just discussed is Plymouth Industrial REIT, ticker PLYM. They operate in the real estate sector, focusing on acquiring, owning, and managing distribution centers, warehouses, and light industrial properties. Their strategy revolves around income generation, property repositioning, and disciplined capital deployment to enhance shareholder value. Now let's dive into the numbers. PLYM is a small cap stock with a market capitalization of $764 million. They pulled in $201.57 million in revenue, but their net income was just $850,000, leading to an extremely slim profit margin of 0.42%. The PE ratio is sky high at 854, mainly due to the low earnings per share, which stands at just 2 cents. However, dividend investors might be intrigued as PLYM boasts a 5.76% yield, one of the more generous payouts among REITs. The fifth and final company on our list today is Winnebago Industries, with the ticker symbol WGO. Now, at this point, you already know the pattern we've been discussing, so I won't go into every little detail. Let's keep it simple. The key support level for this stock has been around $44 for the past 4 years. Right now, the current market price is about $46, which is roughly 5% above the support level. Now, why does this matter? Because this setup presents a very favorable risk-to-reward ratio. If the stock breaks below the support, the downside is limited to about 5%, which makes for a manageable stop loss. But if it holds the support and reverses, the upside potential is much higher. So that's all there is to it. I won't drag this one out since we've already seen the same structure multiple times today. Just keep this stock on your watch list, and let's see how it plays out. The company we had a discussion on is Winnebago Industries, ticker WGO. They're in the consumer cyclical sector, manufacturing recreational vehicles, RVs, and marine products. Now, looking at the numbers, WGO has a market cap of $1.3 billion, making it a small cap stock. Their revenue came in at $2.84 billion. But here's where things take a turn. They reported a net loss of $18 million, resulting in a negative profit margin of 0.63%. This means they are currently operating at a loss, which is why their PE ratio is not applicable, and their EPS sits at negative 67 cents. However, for income-focused investors, Winnebago does offer a dividend yield of 2.2%, which could be appealing despite their financial struggles. All right, then, that wraps up today's stock picks. I hope these insights were valuable to you. Remember, the stocks discussed on this channel are for educational purposes only and should not be taken as investment advice. If you found this video helpful, don't forget to like and comment. It really helps grow the channel. Until next time, take care, and I'll see you in the next one.